What's up, guys? It's Rob here, and today we've got to talk about the incredible report that we just got regarding inflation and why the market is actually up. All right, we got some really good news for stocks. However, it is not being portrayed that way if you look at the mainstream media. You can see the articles that are being written on CNBC. They say inflation barreled ahead at 8.3% in April from a year ago, remaining near 40-year highs. Now, that doesn't sound very bearish or very bullish, right? That doesn't sound very good. And from looking at the stock market, you'd actually realize that it's fairly good news that we got, right? Initially, sure, the inflation data tanked the market, but we have been moving up since as people have really come to terms with the nitty gritty of this inflation report. And we are going to look at just that. Now, I will admit, CNBC is not lying, right? It is still 8.3% annualized inflation. However, what's really interesting is that most of that inflation is coming from prior months. All right, this month was actually very low inflation compared to what we've seen over the past many months, the lowest since September. We actually tied with September back then for the month over month inflation. You can see a little chart of it right here, right? You can see the month over month data. The higher the bar, the bigger the inflation. You can see that we did just in this month drop off of a cliff compared to the inflation that we were seeing last month. So really good stuff, all things considered. Now, going to the Fed's chart, right? The Fed has broken down where all of this inflation came from or where it didn't come from. And what they've actually done, unfortunately, is they've changed the way this chart looks, okay? They've added a huge space in the center right here that's just unnecessary, and it's basically pushing off some of the data, so you can't even see it on the camera, and my face cam is obviously covering some of it. So what I've done is I've made a little picture of it, right? I've basically taken a screenshot and condensed it down so we can fit it all on the screen. So let's just get rid of this and look at the inflation data that we got from the Fed. So what's really impressive about this month, right? 0.3% month over month inflation. Really good to see. That's much lower. That's 25% of the inflation that we saw last month, right? Last month was 1.2% inflation. This month we got 0.3%. So really impressive. This is the lowest that we actually have on this little record that the Fed has of the past 6 months, right? September was also 0.3%. And this is the lowest that we've had since then. So really impressive stuff. And if you annualize 0.3%, just imagine you get 0.3% inflation every month for the next many months. It annualizes to 3.6%, much lower than the 8.3% inflation that we're currently experiencing. So all things considered, looking at this from the perspective of month over month inflation, this is a really good direction for the market to be taking. Now, all in all, a lot of this deflation and, these anti-inflationary pressures did come from a decrease in the cost of energy. That's exactly what we talked about in the last video, right? We knew that oil was going to be cheaper, and it certainly was. You can see there was a pretty big deflation in oil this month, minus 2.7% for energy, minus 5.4% for energy commodities, and minus 6.1% for gasoline. Now, this did also continue to see some deflation in used cars and trucks, which is very nice. That has been going on for the past couple of months. But also a new category, apparel, was lower. Now, hopefully we'll continue to see deflation coming in across a bunch of categories. That's impossible to say in the future, but things are certainly slowing down economically, right? We did see GDP last quarter actually become negative. So that was kind of scary, potentially not just for investors, but potentially for everyday people. People might just be going out and spending a little bit less. There might be less buying pressure, causing less inflation overall in a bunch of these different categories. And we'll see how that plays out over the next couple of months. This month was certainly saved by lower energy costs, which is very good to see because energy translates to a lot of different areas in the economy. And in fact, if you actually look at this inflation, you can see that we continue to see a somewhat sharp rise in transportation services, up 3.1% right here. And that is completely understandable and expected, right? Because it is lagging behind the massive increases in energy costs that we saw the month prior, right? They're not going to instantly be raising transportation costs. They'll try. They certainly did raise them a bit the month prior, but they raised them even more this month. So potentially, we will be actually seeing this deflate next month as it takes into account lower energy costs than what we saw the month prior. I know that's a little complicated, but hopefully you got the gist. And all in all, this is very exciting stuff for the market, right? I'm very glad to see that stocks are reacting well to this news because they absolutely should be. This is exactly what we were hoping for, a big drop in inflation. Even though you can't see it on the annual chart, it is still a very big drop considering the month over month data. So other than that, guys, keep in mind none of this is financial advice. I hope you have a great day, rest of your day. And if you enjoyed the channel, feel free to subscribe. And other than that, bye.